European firms are gearing up to invest in China's gas sector after French President Francois Hollande's recent visit. With demand for gas soaring in the country, analysts see huge growth potential for European investments in China's gas industry. Martina Fuchs reports from Beijing.
He was the first leader of a major Western country to visit China's new president, Xi Jinping. And he was accompanied by a large entourage of French businessmen and women, many of them eager to tap into the rapidly growing energy sector of the world's #2 economy, in specific, gas. On the occasion of French President Francois Hollande's visit to China in April, GDF Suez, the French gas and utilities company, which has its headquarters here in China, in this building in Beijing, signed several deals with Chinese partners to help the country multiply its natural gas storage capacity as well as move from coal to cleaner fuel. GDF Suez has been active in China for nearly 40 years, but started to flirt with the country's vast energy sector 5 years ago. Under one deal signed with China National Petroleum Corp, GDF Suez will assess projects to convert depleted gas fields into underground gas storage facilities.
So we're going to look at 6 sites. You have one in Liaoning, another one in Hunan, another one in Chongqing, in Xinjiang, in Hebei too. And why is our gas storage is important, and why do we partner? It's because the gas market is booming in China. And it's like in a supermarket. You know, if people want to buy more goods, you need to have a storage. And right now, the gas storage capacity in China is less than 5%, while you would need 10 to 15%. We are going to help them to fill with gas former gas depleted fields so that they can be turned into gas storages.
In addition, GDF Suez wants to sell China its first floating liquefied natural gas import terminal based in the port city of Tianjin. Analysts say the growing domestic demand for gas is the trigger for investments from overseas.
5% of all the energy consumed in China today is natural gas. That's relatively low to the rest of Asia and definitely relatively low to OECD countries. So, let's say gas becomes 8% of China's total energy mix. In cubic meter terms, that's somewhere between 200 and 250 billion cubic meters. Versus 130 billion cubic meters in 2012.
However, the business community in Beijing says there is still huge spare capacity for European investment in China, and not only in the field of energy.
Well, last year Europe invested about $6 billion in China. It was about the same amount the previous year, so it's stable right now. The amount of investment coming in represents about 6% of China's ODI investment from abroad. For Europe, though, it's actually just a drop in the water. It's only 2 to 3% of what Europe is investing abroad. So there's a huge potential to invest more.
The Chinese government aims to triple the use of natural gas to meet about 10% of total energy demand by 2020. So far, only about 2/3 of China's 600+ cities have access to gas supplies, meaning there is huge potential to unlock. Not only with gas, but also renewable energy such as solar or wind power. Martina Fuchs, CCTV, Beijing.